Hello, Warriors. Dale Pinkert here from TradeGateHub.com. We're getting some dollar weakness after making a new high. I was looking for some divergences after we took out this 94.50 high, and we had a hot CPI, and the dollar tried to rally on it, failing now. We could have another hot PPI number and the dollar get one more lift up towards 94.80, but I've started dollar correction type positions. With shorts here, I'll sell more at 94.80, 94.70 if that happens over the next couple of days. I've noticed in the euro there are so many bears. I think only on the DSI there's only about 15% bulls. So everyone hates the euro, and that could set the stage for a decent recovery. I'm not looking for a dollar collapse. I still think that the dollar could pull back. The key area is going to be the breakout at 93.50 right here, but you can see the negative 4-hour candle we're getting right here. To me, looks negative, and you're not late if you didn't sell the top and you have a piece on. So if we take out 93.50 after peaking around 94.60, that would give you another 110, could give you 92.40 or so for a dollar correction. And I always felt that if the markets were going to have a chance to rally, it wasn't going to do it in the face of the dollar continuing to explode. And we're getting some decent action. Looks like we're forming a higher low in the NASDAQ 100. I know. No, you're not in the twilight zone. I've become constructive on the market until year end. If we get NASDAQ back over 14.9, just arithmetically from the low a week ago, it's only a week ago on Monday where I covered bearish option positions. We rallied back up to this 200-day on the 2-hour. Every once in a while, you'll find a moving average that acts just like a trend line. And that's what we have going here in the NASDAQ 100. So I would call 14.9 closes over this MA a breakout. And then you just take the measured move of this from here and you just tack it on above 14.9. It almost gives you a retest of the old highs. So dollar's a big story, and that's filtering into the metals as well, getting a real nice pop in gold, silver as well. I was thinking that I might have a chance for one more short, one more decline into the 1734 level, but we start closing over 1780. I don't think that's going to happen. So not a lot of bulls in gold and silver either. I'm looking for a period of silver outperformance. I would, if the dollar could rally one more time, my zone would be down here at 22, but it's looking pretty good. A commodity that everyone loves, so I guess you could call me Coach the Contrarian here today. And I'm looking for one more high in the energy complex. You see this high and you see this RSI reading. So we have a confirmed high. So let's see if the real simple implicator leads me correctly to be awaiting one more high where we diverge. I think that's a pretty good possibility if we got one more shot up above 82, that the RSI would not take out this peak RSI reading and be somewhere under 70. So that's something else I'm looking at down the road. I'm not short now, still looking for this high to be taken out, price high to be taken out, and be left with a lower momentum reading here in the RSI should that occur. Want to talk about a little bit about Canada. I've been bearish, looking for 122 since this neckline broke last week, and no reason to change my mind here in Canada. But this is going to be a good buy in Canada. Take a look at the weekly, and we're going to be pulling back towards the 61.8 level. And I don't know if we're going to go 78.6, but this will tie in with an energy high. So if we get a top in crude, we're looking at buys in Canada, maybe 100 to 150 lower. I don't think we're going to 22, but 23 is viable And then we could have something like this once the dollar regains its footing, and especially with the correlation to oil, if we get a big break in oil where we're, you know, topping up here, and we pull back to the $70 level, we could get a pretty good rally in USD CAD. So we've had, you know, a sideways consolidation after this big wave. So looking for both shorts at higher levels in the oil above 82. And then I'll start looking at long positions in USD CAD down in between 61.8 and 78.6 down here, and a pretty good rally. And for oil, should that develop and we get one more new high, I do think that we could see $70 again. So right now we're down about 80 on the day, and we're already diverging in the oil. As you could see, you know, these were momentum highs. We did get a little bit over 70 on the 4-hour here, but as you can see where it's at now, if we had a $3 rally, $4 rally, I don't think that we're going to confirm it with the RSI. I invite everyone to come in and learn about the RSI that I've renamed from Relative Strength Index to the Real Simple Implicator. And so you learn that it's not just about being overbought, oversold, but there are actionable things you could do with the RSI. So, you know, if you're interested in learning why I renamed it, it's because of what it implies to me, both for turning points and continuation moves. So I invite you to come to our main trading room, chat room here at tradegatehub.com. See what else I really want to cover here. You know, there was a very interesting day in the bonds yesterday, you know, and everyone's talking about higher yields. So bonds were up. TLT is a proxy for it's a 20-year ETF of treasuries, and we were up over 2. So, you know, now that everyone's embraced higher yields, we're getting a pretty good rally here in the TLT. 10-year came off. So eventually I think we'll get some type of pullback in the yen, which is happening now as we speak. So I don't think this is the final high in the end, but we could get a pretty good pullback. Maybe an ideal place would be about 100 lower to think about buying it, and then get one more rally up towards 116. And then once the 10-year pulls back, say to, you know, the 145 level, here you go, maybe pulls back to 47, 48 in here, and then we make a push towards 210 sometime in the fall above the March high, which would be here. But right now I'm thinking rates are lower. There's a candle setting up a little reversal week. So when you think about it, the headwinds that equities had were higher yields, higher energy prices, and a strong dollar. And I'm seeing a window where we could get counter trend moves in all of them, which will remove a lot of the headwinds in equities. And, you know, as I've been saying for about a week now, and, you know, I get nervous when it looks like it's going to fail because I don't have anything on. And, you know, FOMO strikes everyone. You know, no matter how long you've been doing it, the difference is that you don't act on it and you just sit on your hands. And if you have to, you could try this method. This is what I do. Mrs. Pinkert, will you please take the mouse away from me? Please put it in the wall safe. So if you have to ask your wife to hide your mouse so you can be flat for a while, give it a shot. You know, most of your wives probably don't like that you trade. Anyway, all right. So let's get serious again. You know, I've been looking at the Russell for a long time. Look at this formation. You know, I was thinking for a while, this is distribution, but you know, since I flipped from not being as bearish, we're probably going to get some type of breakout to the upside that'll be terminal. I'm not an Elliotician, but this could just be a wave 4 kind of a triangle developing here. And when you break out, it would be a wave 5 terminal thrust. So we should get, that'll be another signal that the rally will be close to being over, is one more breakout, terminal thrust and Russell to the upside. So that's something I'm paying attention to. And, you know, I have a treat for all my viewers and the crew and my trading warrior brothers and sisters here at tradegatehub.com. Our guest tomorrow is going to be Mark Chandler. Mark's one of the best FX analysts I've ever met, and I've interviewed Mark a few times. He's actually even created his own index for currencies that doesn't have, you know, the majority weighting in euro, because he helps a lot of people and corporations that have to hedge currency risk with their operations. So it's going to be an honor to talk to Mark live tomorrow at the same time. So tune in, and let's see what happens here with the dollar. It's very possible that today was it. Here's your euro. I was talking about in the euro looking for one more low, which we have right here. Of course, we didn't get down to the 3 drive line. Doesn't have to. In fact, sometimes when it doesn't tag these, it's actually stronger, but it qualified because of this. So the previous low was this, and if you go back and look at my videos, I was looking for a new low in euro. Everyone hates the euro right now. They have no problem liking Aussie or liking cable. So I think there's just a lot of complacency in euro. So whether or not we break one more time, 80 pips down towards this line at 1480, I think there's a good chance for a recovery back towards, remember what 117.50 was, a major pivot. And that would most likely take the dollar back down to those levels I talked about, around the 92 range. I think we have some moving averages there as well. Yeah, you know, 93.50. So maybe back towards 92 before we launch for one more rally towards 96, 97 in the dollar. But nothing goes straight up or straight down. So looking at this dollar index as putting in a pretty nice reversal day. And this is something I talked about last week, that the most bearish thing the dollar could do was we had an inside week last week. See that? Inside the prior week's range. And the most bearish thing the market could do is take out this week's high and last week's high early in the week, then start closing lower on the week. And what would be real bearish would be for it to take out last week's low, which was 93.67. So we're still a couple of days left in the week for it to shed another 60 points for it to be an outside week to the downside. So looks like we have a counter trend moves developing. You know, I'm not in the bear camp that this is going to take us down to 85 from here. I'm just looking for a pullback and then one more move up towards 96. Eventually, I think the euro is going to trade down into this level. It's a weekly speed line, trend line I've had for a long time, around 113. But no reason it can't rally to 117 first, or the pivot at 1750. And just too many, it's just too crowded. And I think we have to shake out some of the euro bears before we head down to this major line around 113, which I think is going to be a major buying opportunity, not just for a trade, but for a position. So I invite everyone to come work with us and share ideas in the room. Invite you to tomorrow's interview with Mark Chandler. His Twitter handle is at MarkMakingSense, SENSE, and I'm sure he's going to make some sense tomorrow. Good hunting the rest of the day, and remember, don't just count your pips, count your blessings, and we'll see everyone tomorrow for the interview with Mark Chandler. Adios.